Good morning, Chris here with OptionMillionaires.com with a little bit of market forecasting today. Alright, so this chart should look pretty darn familiar to everyone else. It's the Dow Jones, the S&P looks pretty much the same, and the NASDAQ looks pretty close to the same, just lagging a little bit. This kind of pattern, in the technical analysis world, I would call a 7-wave Elliott correction, or in layman's terms, a major pain in the butt. Okay, so this morning, to start off with, it looks like the actual Dow itself, and I'm just using the Dow for this, it can easily translate to the S&P. The Dow looks like it's going to be going up about 71 points on the open. So that's going to put us at, let's see, that's going to put us at about 1371. Now this is what I want to talk about right now. So notice that I labeled each one of these tops and bottoms with a letter. Now this actually translates to Elliott wave terminology, which I'll talk a little bit about later. But the main idea in this is, for an Elliott wave forecast, it means that we are in the last upswing of this correction, and then we're going to start moving down pretty darn quickly. But anyway, this is what I want you to take a look at. See these, on the bottom I have the momentum, and I have this green square zone to represent overbought, this red zone to represent oversold, and I just put that there myself. Now, I want you to notice each time the momentum, when the momentum peaks, the actual price never peaks until a couple days later. So you see the momentum peaked there, and then the actual price peaked there, but the momentum was lower. That's called a bearish divergence. And conversely, notice that the actual momentum bottoms right here, and then it was about this area, and then a couple days later, price continues down and makes its ultimate bottom, but the momentum is going up. That's a bullish divergence. Now notice it's been doing this every single time there's been a top or bottom. And we keep going. Okay, we get bullish divergence, bullish divergence, and then this, there's no divergence yet. It's just an actual momentum spike. So you see that this peaked, and it coincided right with the actual peak in the stock price. So what does that mean to me? It means that the actual advance is not over yet. So if we actually zoom in here, I'm going to call this point right here, which I'm going to put another red square on top of, that's the momentum peak in the entire market. But that doesn't mean that it's done advancing. That means that there's normally enough room, as you see after every single momentum peak. That means that there's probably going to be enough room for one more rally. And we see that starting today with the Dow planning on going up to about 1370. So that's going to put us right up to this new high. So where is my actual target? Now this is where the Elliott wave stuff comes in. You see I have a C2 up here. In a 7-wave correction, you just label it as a 3-wave correction. So you have 1, 2, 3, and then you have a connecting wave, which we call X, and then you have another 3 waves. So 1, 2, 3, or A, B, C, and I just put the 2 next to it just to make things more clear. A typical relationship in Elliott wave, or any proportional market studies, is that the A wave and the C wave should be the same distance. And if they are not, well, I'll tell you in a second. If they are not, then one of the waves should be 161.8% larger of the other wave. So let's see if we have an equality retracement here. So no, obviously this C2 has already breached through the entire height of the A wave. So what do we do next? Sorry about that. I'm going to take this, measure it out one more time. So we got, and then we're going to put it to the bottom of this down wave, and now we're going to project the 161.8 retracement. Now there is our price target, 13,292 and 11 cents. Not to be too exact, but it's going to be about that area, so about 13,300-ish. And when's that going to happen? Well, that's when we do that's when we can do pivot analysis, which, let me put some more lines on this chart. So from this previous high right here, just a second, I gotta get my correct setting. Okay, so I put all these lines on the chart right now, and this is going to give us a series of places where we expect the market to turn. First, what you want to look for is places where these lines actually bunch. The first place you see lines bunching up is actually this morning. So we can expect an upward swing or a reversal of the previous momentum, which previously it was going down. Now we hit this pivot area and it's going to go up. Okay, cool. So where is the next one? The next one is going to hit on August 2nd at about 1:30 p.m. But that's not a cluster, that's just one. So I'm not going to give that one too much credence. The one I am going to give credence, though, to is this one, which occurs on August 3rd. So from what I am seeing, we should expect a pretty strong advance at least up until August 3rd. If the actual correction doesn't end there, then there's a series of very large pivots that I can't even fit in this chart, so you can only see two of them, but they all hit around August 10th through August 13th. So for right now, targets at about August 3rd. I really think that somebody in the next 2 days, Wednesday, Thursday, Friday, I think that somebody is going to put out some good news, and you're going to see the market jump up 250 points. All right, so that's what I'm looking at, and remember, target 13,294 and no higher. All right, thank you for watching, and come back to Option Millionaires soon for more trading goodies. Have a good one.